offshore. We're completely independent. So yeah, today I'm just going to talk a little bit about some of the global investment sectors and global infrastructure investment plays. Global infrastructure is a very important asset class for investors, mainly because of the stable income that it provides, as well as the yields, and of course the consistency. Everyone needs to use toll roads, as well as hospitals and so on. In terms of my company, I'm usually in the front row, so you can probably find me. That's what happens normally, especially in South Africa. But yeah, our company, we have about 250 million US under management. In South Africa, we do have an FSP license. We have a practice in Bryanston and also an office in Cape Town. Now, in terms of offshore jurisdictions, so we actually take people's money offshore. We invest mainly in Luxembourg, as well as Guernsey and the Isle of Man. So mainly because of the tax efficiencies, and of course, as well as the money's in foreign currency. That's kind of our access to the international markets. We're independent, so we utilize everyone from Goldman Sachs to Deutsche Bank to Bank of America and so on to create a kind of international diversified portfolio. We also, like all financial advisors, provide ongoing investment recommendations as well as valuations, so you can go online, see exactly how your accounts look. We have, I think, we have about 5,000 clients in I think 80 different countries, so it's very portable. If you look at Africa, we all know that Africa is really the next megatrend. Over the next 15 to 20 years, you have some of the fastest growing economies. That's why I moved from China 2.5 years ago. I spent 16 years there. We invested into a lot of toll roads. We invested into a lot of internet companies, and we're still investing in China. And you can see at the moment, in terms of market cap, the U.S. is where most of the world's global stock market is actually housed. A little bit in South Africa, Nigeria. So over the next 15 to 20 years, that pie is going to change drastically. So looking at some other graphs, sometimes you forget how big Africa truly is. You can take the US, China, Western Europe, and put it in Africa. It's just amazing. And infrastructure plays. I'm sure, Paul, you've been to many of these places. I can't imagine how much is going on in terms of mineral deposits, oil and gas fields, electricity, pipelines, in terms of the resources where the money's being spent and how it's being spent. But infrastructure in Africa is massive, and of course is challenging as well, and offers lots of opportunity. Of course, there's many different investors. China has an insatiable demand for resources, maybe not as insatiable as it has been, but they still have a massive demand. So there's lots of different investments. I'm sure you've been to a lot of these on the map. And if we look at bottlenecks, of course, consistency of utilities is very important. Electricity, obviously market regulations, tariff barriers. So there can be bottlenecks. And then, of course, key infrastructure. I mean, it's really important what they're investing into. Airports pretty much always make money, no matter what. Toll roads, ports, rail, telecoms, and so on. So then you say, well, why do I need to invest offshore? Because if we have all of this infrastructure in Africa, well, the reason is because, of course, there's a lot of other infrastructure out there in the world. We specifically focus on kind of overall financial planning. So we invest into companies like Disney, but also companies like GE, which actually pay a very good dividend and are also focused on infrastructure in India, but as well as Apple and Alibaba, Land Rover, and so on. So if you look at Disney, obviously over the last year, 24% return in dollar terms. It's a company that, if any of you have young children or young girls, they'll have Frozen 2 next year. Star Wars will come out in December, which will be the highest grossing movie of all time. They have the Marvel franchise and so on. It's just a very large conglomerate entertainment company. 208%, over the last 5 years. So those are the types of companies you have access to if you even take a small amount offshore. I like to show things like, I don't know how many of you are familiar with Papa John's, but now Domino's is in South Africa. So this just shows you Papa John's versus Domino's over the last 10 years. And you can see during the financial crisis, 2009, things weren't so good, about 70% down. But over a 10-year period of time, Papa John's did 341%, and then Domino's 430% in 10 years. And I'm sure Papa John's will be coming to South Africa very soon. I think there's quite a lot of Domino's now. When I first in China, there was one Starbucks. Now there's, I think, 2,000 or 3,000. I think there's a Starbucks coming to Cape Town and Johannesburg very soon. Whether you think it's good or bad, just, I guess, progress. And if you look at themes offshore, there's just obviously markets that you don't have access to if you only invest in certain countries. A lot of people will be familiar with Tencent or Naspers because of the big investment they've made in Tencent. They have about 300 million users, kind of the biggest social media app in China, and they're very profitable. Baidu is the largest search engine. And then in China, of course, there is a bit of unfair play because there is a great firewall of China, so Google doesn't compete as much. And Alibaba is a very large e-commerce company. Alibaba actually does more business than Amazon or eBay combined. It's kind of out of favor at the moment, but this company had 35% revenue growth, profit growth last year, and they just had Singles Day, which is November 11th, so it's 1/1/1/1, because there's a lot of singles people in China, and due to the one-child policy, which is now changing. In 2015, they actually did 12.6 billion in sales. So if you look at Cyber Monday, we'll probably do about 3 in the US. So it's a massive market, mainly because of the population, and it's the fastest e-commerce company. And if you look at obviously penetration, there's 1.4 billion people in China, so there's still opportunity for a lot more growth in those areas. If we look at middle class population, there's certainly growing long-term trend. If you look at how to invest in kind of infrastructure assets, if you look at yields, REITs actually provide 3.5%, equities 2.59%, and then for global listed infrastructure plays, it's actually 5.46%. That's a very good yield. So you can see why that's so important to pension funds, to governments. And then if you look at global listed infrastructure dividend growth, you're actually growing faster than more or less any other asset. Still growing very quickly with about 11% dividend growth. So that's the key to obviously infrastructure, is consistency. Then you look at something like MTN, which is a fantastic company, and then you also look at AT&T. So this happens to be, MTN is also traded in the US as an ADR, MTNOY, versus T, which is AT&T. Now, MTN is actually a great company. I don't have any real opinion on what happened in Nigeria, but there are regulatory issues in Africa that make it more difficult to do business for large multinationals. So if you look at something like MTN, offers great opportunity. But if you look at AT&T, they're very familiar with the market in the US, and actually they're taking advantage of digital convergence. They bought a company called DirecTV. So now instead of getting all these different wires to your house and cable bills, you get one telephone bill, and everything's streamed to the internet. So they're doing very well. They pay a 5.3% dividend. So you just obviously have more access to other telecoms offshore. Then of course we look at currencies. At the moment the dollar is strengthening, even though we are the biggest debtor nation in the world, in the US. One of the reasons is because if we don't spend money at the end of the year, then we don't get it back. So the government's actually, there's some incentives that are really set up the right way, but of course a lot of other irresponsible fiscal policies. But at the moment, the dollar is very strong and will probably continue in the near future. So by going offshore, you diversify as well into other currencies. So it can certainly help over time. And net worth is about increasing your savings and your investment returns. So if you look at going offshore, I mean, obviously there's different reasons, taxation benefits, diversification, more or less you can live somewhere else, economics, risk transfer. Just as Americans need to look offshore to a lot of other markets for returns, which is why they're looking at Africa and China now. Dollar cost averaging, just again a really simple concept, but if you put a lump sum in $600 and then 6 months later the share price rises by 2, it's actually better to trickle the money in, obviously every month. So again, that can also help on the exchange rate. So by taking money every month and putting it into the market, just really a benefit of any type of regular investment program. And of course, compounding interest. It's very boring in the beginning. There's no quick fix. There's no get-rich scheme. It's actually about investing for the long term. And that's what infrastructure is about. Long-term capital appreciation, as well as good yields. So we just look at some of the hot sectors in the world. I mean, obviously healthcare, biotechnology, infrastructure. These are all very good areas to be in. By going offshore as well, as you open up to more fund managers, you can have 4-star rated managers or 5-star. You need different markets. This happens to be a UK fund in sterling. You can be in biotech. You can be, let's say, UBS biotech, because they've actually done much better than their peers. So you have a lot more choice and opportunity. In terms of regional banks in the US, this is just an ETF. You have more options. This is actually about 30 different banks in the US. It trades as KRE, because regional banks in the US actually make most of their money by lending. They don't do mergers and acquisitions. They don't get really fancy. And so as interest rates go up, I think you'll see this ETF do quite well over the next 6 to 10 months. And you can get into things like hack. We have to make things very simple in America, so remember them. This is an ETF which is focused on cybersecurity. It only started about 16 months ago, and it already has $1 billion in assets. One of the things about digital infrastructure is that the world is becoming much more connected, but at the same time, cybersecurity is even becoming more important. So we talk a lot about trends offshore. I mean, the Internet of Things. These are real trends going on. Connectivity. Last year was the first year that connected devices outnumbered the population of the world. Cisco's CEO actually thinks around 2020 there'll be 50 billion connected devices. So it won't just be your tablet, and your phone, it'll be your car, your thermostat, and so on, coffee maker. So obviously that gives a lot of opportunity for chip makers, for semiconductors. But yeah, there's a lot of different ways to play that. The wearables, obviously Apple Watch, and of course connected cities is fairly important, and then the industrial internet, which would be where GE would come in. GE is very focused on producing their manufacturing now, and of course making a big push in Africa. And this company really hasn't done much for many years, but it is going to become a very exciting company. They're now focused on this Internet of Things, that they call the industrial internet, and actually producing goods with sensors and so on. And Africa is obviously a big push for them. It does pay a 3.1% dividend as well. And you can see even just from in July, it's gone from 24 to 30. It's a $40 stock easily. Again, because they were selling off GE Capital and all these other assets where they have to deal with governments, and they're not as profitable as what they actually do to manufacture. And then year to date, you can see it as well. It's up about 20%. If we look at chip makers, again, short term, it's very volatile. Skyworks actually focuses on chips that are in iPhones, in Samsung, Android. They focus on chips for the Apple Watch, also for cars, for your home. So this is a company that's going to do extremely well. Now over the last year to date, not great, but 20%. Now let's look over the last 5 years. And this is growing very rapidly. Skyworks is not going to be slowing down. Mobileye is quite interesting. It's actually they have 70% market share in cars as far as with the technology, with automation. And you can see it's a bit of a roller coaster ride, but some institutional investors just put in about $500 million US into this company, and because of the revenue and growth expected. Actually, Tesla, the Elon Musk company, they already have automated highway driving in the US, and they will have automated cars probably in the US in the next 4 to 5 years. In fact, I really like disruptive technology, and so whenever I use Uber here, I always talk to the drivers about how the CEO of Uber, he has a good reputation. He is trying to create robo-Ubers. So there's an institute in Pittsburgh where they've spent $1 billion, and they are very rapidly trying to get rid of drivers. Again, I think there will be 10 to 15 years or longer in South Africa due to regulatory issues, but the technology's there. So you really have to be on the right side of technology as well. And this is actually a pothole. It says caution, potholes ahead. On second thought, perhaps the idea of gas tax increase has some merit. This is actually, we're talking about the U.S. infrastructure. A lot of people don't realize that America actually has a very, very poor infrastructure. In fact, we got a D+ in terms of infrastructure by our engineers. And you can see things on the news. Bridges collapse, you see landfills, you think things happen. So we also need to spend more money as a percentage of our GDP on infrastructure. So just talking about infrastructure offshore, something very boring. Union Pacific's been a railway for, I think, 135 years. So they've gone through wars and recessions, and of course they transport a lot of coal, a lot of energy, which of course has had a downturn. So you can see the the stock has come down. It does pay an attractive, I think 6% dividend as well. But in the U.S., actually, because the infrastructure on roads is so poor, there's going to be massive growth with railways over the coming years. So even if cars pick up that quick, again, it is a downturn in deflationary environment, but it will change. It certainly will. It always does. This stock should hit 105 quite easily, and as well as pays an attractive dividend. So even in a very developed market, infrastructure plays a really important role. And of course, we can see the trend longer term, still a 40% return since 2012. And if we look at private equity, as an investor in the U.S.,